All right, hey, how's everybody doing today? Welcome, привет, здравствуйте, как дела? Hope everyone's doing well. I got usually all kinds of people from all over the world joining me, so we'll see how things go. This is a new channel, so may not be as busy today. But we'll take a look at some charts, and if you got questions, you can post them in the live chat. I'll be sure to answer them here as we go. So we'll do some quick stock analysis. I'll do some of the stuff that's kind of catching my interest right now in the current market conditions and some of the things that's going on, things that I think look good, look well, and some of the things that don't look well. I'll give you my straight up thoughts and answers rather than trying to do, pump and dumps, which I typically see a lot on a lot of the YouTube stuff that people send me. So, what happens, people pump up these certain stocks on different YouTube channels and then they're in the stock and then they just dump it to all their followers. So, anyway, I had a few coaching people and mentoring students talk about these things, and it's just, oh man, a disaster. So I started doing a few of these live sessions now. Also with December, it's a little bit lighter for me on the mentoring side because we do a lot of one-on-ones and coaching and that kind of thing. So everybody's getting more into the holiday spirit. So Happy New Year here coming up soon. Merry Christmas if you celebrate it. Happy Hanukkah and that kind of thing. So, so with the holidays here, it gives me a chance to experiment usually a little bit more. So we're going to get started here in a minute. I hope you're having a good night. Happy Monday. We got a good week coming up. So hope to make the most of it, as any day above ground's a good day, right? So anyway, let's see. We got anybody live yet or no? Got a couple people coming in. Okay. So excellent. Going to do a couple of quick tests here soon. Right now we've got a couple of Giphies, emojis I'm going to be trying out later on this next week. Got a couple other stuff. Going to try to stream to some Facebook things, 2 platforms, usually new to me, and we'll try to do some interviews, meaning you guys can hop on call. We can do like a quick 30-second back and forth. So I'll be experimenting with that over the next week as well. We'll try that out with time. So I'll have to try that out with my team and then we'll go from there. So anyway, once that's live and good to go, then I'll let you go in and you'll be able to pop in and ask questions. I know a lot of the things that I do is options related. It's much more advanced and some people struggle with that. And I get it. It's a complicated subject. I mean, even for me, 7-10 years into it, man, it's just mind blowing, right? But it takes time to get there, and after a while it gets easier. But back when I started, there was none of this YouTube stuff. I mean, everything was done by phone or old school seminars, you name it. I mean, it was just totally different game. Now it's way easier. You can compress that education much faster. So anyways, should be getting on top of all that education material that we have available, and just trying to connect you guys to some of the knowledge that I have. So maybe a little piece of me can move forward in life with you, your kids, and so on. So I love working with you guys because it's always the smart folks here in the stock market world, and people that are successful in other ways, and then they use that to better themselves mentally, psychologically in the markets. It's just always ramps things up. It's like playing chess. I don't know if you guys play chess, but I always played chess a lot when I was a kid. And, you're always thinking, like, getting better. How do I improve myself? And this one, with the trading, big time psychological game. So, anyway. All right, we're going to start here in about 40 seconds. I am 8 seconds delayed behind you guys. So, good evening. We'll see how long this session lasts. I have a handful of things planned for you guys. At least 7 stocks to watch out for. Are they hot? They're okay. I wouldn't say I don't get too emotional about any stock, to be honest with you. It's more like, hey, it's a good trade or not. That's it. It's that simple. The emotional side on it is really just headline stuff. Other than that, you just take the trade. It either works or it doesn't. A lot of stuff like Mark Douglas says, hey, there's any one trader can take you out right away. So it's not anything to be excited about. So I typically like to trade high beta, high liquid stocks. That's just my personality because it's hard to manipulate them. So, but a lot of people that pump the penny stocks, be very careful with that. So we're going to get started. Let's get going. If you got questions, put them in the chat. I'll try and answer them periodically as I go in between some charts. But we're going to get started and start rolling. So let's kick it off. First things first, there is a disclaimer. You know, investing in stocks and options, it involves risks. It's not for everybody. In simple terms, you might have a different risk level than I do, and you feel different pain levels. So talk to someone that knows your personal situation. And this video is just for some general insight. I might not know what I'm doing. So take your own insight, knowledge, advice, talk to somebody that knows you, and get some education that way if need be. All right, let's go and get started. We're going to first start out with a couple of interesting things that I think are have some potential. Okay, so first one, MRVL. Now you take a look at this gap up. Actually, let me put it on for bars for you guys. I think it's just easier to see. So bars right here is just, I film it with the bars because it's just easier for the video production side. Normally I look at things this way, these bars. Candlesticks usually just better for recording. So anyway, I'll do it for this way for you guys. And anyway, so looking at this one, MRVL, the reason I mentioned this one is we had this gap right here that popped up. So when we have this big gap up, usually I am worried about gaps. Not too worried, but I'm like, hey, there's a gap right there. So this could be a huge issue or problem. However, this one had some nice volume, which picked up some good speed, and it had a second day that held its own. So when they hold their own, this is usually a good sign for higher prices potentially. Now, what you want to be careful about is sometimes when things gap up and then just start selling off. So that's called fading the gap. When you fade the gap, that's a big issue. This one seems to have popped and it's staying stable for the time being. If you're ever getting into a trade like this, or you see a setup similar to this, because our goal is to do pattern recognition in this kind of stuff, is if you ever see something like this, what's going to happen is use the lows of this gap, okay, right there, where the highs of the gap, I mean, and the lows of these bars, and use that as kind of your stop. That's like your exit point. Boom, give it like a little wiggle room there. But other than that, don't let it go beyond that level. So you could take those trades, nibble on it a little bit. Second day, add a little more. Third day, add a little more, add a little more. And then by then, you should have your full position pretty quickly, okay? Don't be too... How shall we say it? Don't be too aggressive getting in all right away first day unless you have full confirmation, because it's a little risky with the fade the gap situations that could come up. So be mindful and be a little careful. Okay, so before we continue, let's take a look at just the overall market and the SPY. And what I want to show you here is I've got a few different indicators here. I don't use that many. And I will tell you that these are exponential moving averages. They are lagging indicators. Typically, what you want to do and look at, you're really looking at a couple things. Price and volume, okay? Anybody else who adds like a bunch of other stuff like MACD, stochastics, everything else, all that stems from price and volume, right? Because what is MACD, what is stochastics? It's all an average coming in from price and volume, basically the movements. And if you're doing anything else, it's all lagging anyway. So for me, I keep it simple. I use kind of like moving averages here. Do I look at other stuff? Yeah, absolutely. I mean, I got other stuff like down here, Williams AD, and other indicators I'll browse through, but 90% of the time, you don't need that stuff. When you have price and volume and you can read price and volume, it's going to be just fine. Okay, so as we look at SPY, what I want you to think about is like, okay, how far down are we? Because what you're going to notice right now on the, I will say on social media space, is there's going to be a lot of fear mongering, and there's going to be a lot of people that are put you in fear like this. This is not over. And usually for me, I'm always very cautious. I'm very risk averse. I trade lighter, man. I got kids. So if you got kids and they're sick and you got to go pick them up and you got like $100,000 on a trade going on, that's money you need to be very careful about. So in this case, what's going to happen is that a lot of people are going to start sucking you in on the social media space that, hey, this sell-off's not over, just wait, it's going to bounce and then sell back and roll over. And yeah, of course it's possible, but what I want you to pay attention to is that really look at the actual numbers and the typical trending ranges and what actually happens. If I look at Fibonacci levels, and this is standard Fibonacci, okay, so Fibonacci level, you're just taking kind of the lows of this, just as a quick education, the highs of this. So you take these, you add them together, and you get divide by 2, which gives you 50%, okay? So if you want to take those numbers, take that number and that number at the highs, take it, divide that by 2, and you're going to get over here 50%. We are right there at 50% retracement, and that's why I use the 89 Fibonacci level sequence. And a typical healthy stock chart can retrace to 50% and nothing be wrong with it. Okay, so all the other videos out there that's going to say, hey, this market's going to roll over, toast, everything like that. I would have said, hey, I would have said those things earlier over here once we started rolling this over and once we were toppy over here, because I was saying, hey, man, we're kind of toppy. We're toppy. We need to go sideways or something like that. And that's true at that point for sure. But now that we're down this much, what you need to start looking at is some of the big companies. And this is how I evaluate the markets, is I'm kind of looking at, okay, like what's going on with these markets? Okay, so the markets, you're looking at the big boys, because when the leaders are starting to roll over, right, that's the big issues. Like when you got a stock like Amazon going highs, breaking highs, and then rolling over, that's an issue. But now that you're starting to get a little stability, you're starting to say, okay, well, that's kind of a little bit better. Same thing with Netflix here. Like this stock was stepping like a froggy over here. Look, it's been going up, but then it's coming back right here. And look, it could still go higher. And the reason I say this is, look, again, if you look at the swing points, we take the lows here to the highs here. Look, it's a typical standard retracement, 50%. Look, stocks don't go straight up. It's the same thing as you look at here. Just take any other normal wave progression pattern, right? They don't go straight up. Let's just take this one from here to here and watch the retracement here. Okay, so go from here to here. And I haven't done this ahead of time. I'm just saying it's just normal. Like most of the time, this stuff is going to work out like this. Look, it's going to go in. This one is a 38% retracement. So you got 38%, you got 50%, 61.8%. It's standard, right? And the same thing, if I look at the bigger scope, right, now that we're worried about this overall marketplace, we're going from here to here. So let's take it to like a 3-day chart so you could see the swing points. And what I'm taking now is taking the lows over here, taking the highs over there. And look, we're right in there at the 50% mark. And you can see it's also coming into support and resistance at those levels. So what I'm saying is that we don't need to be too panicked about more fear, more panic coming into place. Now, yes, there are certain sectors that I'd be more worried about. Like, for example, Moderna. Oh, crap, this one's toast. But it also skyrocketed here earlier. So if you got in a little bit earlier over here, which was kind of, take a look, nice sweet spot of this level and this level. So if you got in at these levels and it got shot up here and now it's down here, today was pretty much a beating with volume increase. That's not good, but it's individual. So as I'm starting to look at some of these things, here's what I'm looking at. So we talked a little bit about MRVL. There's no, looking at fundamentals, I find it's a time-consuming game unless you're spending 2 to 3 years into a trade. So typically what I always say is, look, and you can argue with me all you want, is a good chart will typically have great fundamentals, right? So great charts have great fundamentals, and great fundamentals will have great charts. You can buy into the story all day long. I could tell you, man, this stock is going to be doing fantastic and amazing in the next 6 months because of X, Y, and Z, right? They got this going on. I have no idea why it will actually go up, because the only way for me to figure out why it's going up is I got to contact 15.6 million different trades, not exactly trades, but the shares, and figure out what was the reason. Why'd you get in the trade? There's no reason in these order tickers when they place the order to get into the trade. So it doesn't really matter why, right? One guy might say, hey, I invested it for my kids. Another guy say, I'm taking my short losses. Another guy might say, hey, I just traded earnings for the day. So anyway, point being is, it doesn't matter why. All right, let's check out some of these other ones. Here's NVIDIA. Same concept. Let's take a look. There's another one that I think is looking for a nice, healthy pullback setup that you could have some good value into it. And look, right here, the setup of 38.2% retracement. I'm using a lot of fibs right now just to give you a range or idea, some kind of tool to use, because I know a lot of people like those kinds of things. Like, hey, I got a tool, I get it. But you got to know, to use this tool properly, you got to know the swing points. Like, how do the swing points go? And if you don't know how to do that, set it up on the daily or the weekly or the 3-day, and it'll be a lot better. If you're trying to do it like on a shorter time frame, it may give you some mixed signals. So just be careful with that. But here, take a look. We're coming right in to another support level at this, let's see, we're at 288 or so. That was the support level here. And we're also coming off another fib level here, which is the 34 EMA, exponential moving average, something super, super simple. Let's look at Microsoft. Same concept. Look, check this out. Stock went up, we came back. Just look at the past, right? Simple thing. Look at the past. We've been grinding higher. I call these the train tracks. We got these train tracks spread out. Once these train tracks get compressed, again, it's my way of teaching. It's not, doesn't mean this is the only thing I look at, but I'm just saying, look, they're getting compressed. They're coming into this train track at the lower level, and we're getting our bounce, right? So we got up, we got our bounce, and we continue heading higher for a while. And then once we get higher, again, we're compressing, and now we're starting to look for another level. And it's starting to become an interesting opportunity, because if you take a look at the lows here, I have to take it to the lows and to the highs, to the tip, not to the close, to the tip, because that's the highs. And look at how that lines up perfect. Oh my goodness. 38.2. Isn't that amazing? Boom. How that works. Human psychology and human behavior, right? It's like I always say, your friend that's going to be late for dinner, you tell them 6 o'clock, they're there at 6:20. It's probably going to happen again, right? So that's the same thing here. Okay, let's check out another one, XLK. This is the Spiders Technology ETF. And what you'll typically notice, just so you guys know, when you look at just the wave patterns, you'll see they'll come back to retest. Stocks can either do one of two things. Look, we've got this, like, let's just say we got a moving average. Stocks, what they can do is they can move, and we can get away from a moving average, or we can pull, so get away, or we can pull back into it. I do this much more so with Keltner channels. You can see this. So look, getting away from it and then pulling back into it. So stocks can do one of two things. They're either breaking out, which is what 98% of the people are really looking for, or the other way is they can pull back in. So you can play the opposite of it, or you can play it actually even pulling in on the right here. When it's oversold, it's pulling in. So this is technically a breakout, but it's pulling in. So they can do these things as well. So look, breaking out, or when they're here, they're pulling in, right? One of two things. So XLK is another one that I've kind of taken a look at here. And this one's an easy one to trade because it trades like 18, 19 million shares right now today, which is really easy for liquidity. So for those of you that I deal with that have larger accounts, this is a good one for trading purposes. Again, I'm not recommending anything. I'm just sharing you my insights. Here again, just take the highs, take the lows, pull up your fib levels or so, and you get a nice range right there, 38.2% retracement. So right here, and now the question is how do you know where it's going to go? Like, how do we take this stuff and we push it into higher levels? Like, how do we project the move? Like, when is it going to be back to overextended? Well, what I do is you take this range, we'll call this the A to B leg, and then the B to C, and now C to D. So that'll put me way over there. So I'll take this range. So whatever this range is, I could do the calculation. It takes a little longer. But here, roughly about, let's just call it 27 points, okay, from the lows to the highs. 27 points. So now what I can do is take it from the lows over here and run it about 27 points. And that'll get me right around 189, 190, really, when you think about it. So think about that for all the panic that's going on out there, right? From a trader's perspective, this is a way to suck. This fear is a way to suck a lot of retail traders into dumping their shares. And for the YouTubers that really suck you in, this is the way that they say get you to panic and buy into the stocks they're holding, especially the cheap ones, like people that recommend like cheap stocks, anything under like 10, 20 bucks. A lot of those people trade like, you know, low liquidity stocks, or like they buy into the hype or buy into the story, which is fine, but it's not trading. It's like investing. It's a different thing. Like here, I deal with, excuse me, a lot more active trading rather than long-term investing, but we have a mix, right? The larger the portfolio, so let's say you're dealing with a $100,000 account, you have to have a mix, right? Some people might have 20% investments. Some people might have 60% investments. So when I deal with coaching and then mentoring, I deal with a lot of different people. So some people invest more. Some people invest less and actively trade like 80%. Other people actively trade like 40%. So again, for me right now, I probably actively trade less than I used to because I got kids now. Oh my God, they take up time, right? So when I was younger, I traded 100% of my account, basically, very actively. But now I'd say probably like 30%. A lot more of it is more in longer term holdings, a little bit. But I'll do 30% or so with more active trades between like options on 3 days, like very short duration, all the way up to like 40 to 60 days, sometimes even 90 days, depending on the market conditions. So stuff like this right now, I threw in a few different trades that maybe are, 60, 70, 80 days in duration. And that's simply because you're trying to give it time to work out in the future, because you don't know when the volatility will drop. You just know eventually within probably 60, 80 days, it'll probably drop. And with the holidays, there's always lighter trading, lighter liquidity. So I have to kind of burn through all those holiday closes and stuff. Okay, let's check out another one here, XPEV. Here we are on the daily. Again, notice how this one's like really rough. A little bit concerned here with this one. It is 19 million, but it is a cheaper stock and it's kind of popular, so I thought I'd mention it. But one to watch, like if it can hold here, again, if I have no idea if any of these will work out. I could be, as I mentioned, I could be an idiot. But what I'm saying is that if it holds right here, this is what you're watching. If you can start reversing. So typically, let's say you're trying to trade 100 shares on average, or in other words, let's also say $1,000. If you're doing it by dollar figure. Well, in this case, you might say, okay, I'll do 20 shares or maybe $200 if you're doing it this way. So you nibble a little, and if it starts proving itself, then you can add to it. That's the smarter approach. So anyways, looking at this, again, pullback, retracement, what I'm noticing is some of these stocks are setting up fairly nicely. So this one's coming into 61.8%. And the 50% right here is kind of also the critical support level. So you got a lot of things lining up in some of these stocks that look actually favorable. Now the question will come over this week. You're going to see if it's going to pan out real nicely or not. So that's what you're kind of watching. I got another one here, P&G, that's just exploding. Like, this thing is moving like a tech company. Look at all this volume that's coming in. This really caught my eye. This thing is slow as molasses, as slow as maple syrup. It's super slow. Typically, I don't touch this one. There's not a lot of option premium and volume. Not a lot of option premium in it. The volume is big, but the option premium's not as much there. But this one is definitely moving very well. So it's really, really nice now. So nibble on it before it gets too far away from you. That's the way I would approach it. Because if you try and chase stocks like this, like I find when they have this kind of explosive move too quick, this is a little bit of a problem, right? They explode too quick, and then you get in it right here, and then boom, they back off. This is the same stuff that happened with this Moderna. Boom, explodes too far, people get in right here, and then it just pulls right back. So be mindful of those kinds of things, because that could be a huge issue and problem. All right, so that's what we got, 2, 4, 5 stocks. I've got a couple other ones that are interesting, a little more speculative. You got some of these airline things coming up. United Airlines. Notice we've got some weakness here, but check it out. Right here, this one right there, trying to get back above there. Again, nibble, speculative type of trade, nothing major that I would look at, but something that's catching my eye a little bit. We've got the same thing with Trip that's starting to turn around a little bit. So as you watch this, you're starting to see this, and this is what you're looking for in stocks that are looking to change course, especially with this. Like you check this out from the highs over there to the lows here, and you can see we got a 61, almost 62% pullback. So that's 40 points. And if you look at the A to B, B to C pattern, man, this thing is, it's big, right? So we've got a big move here, and that's where, as I'm looking at this, we're setting up right at the 25 level, nice round number. So you can check it out. Again, it's a price range. So you've got this one. Look at all these levels. So it's a nibble. It's a nice, interesting spot to check things out. But we'll see. We'll see how things progress. But it's one that's coming into that $25 level. It looks kind of cool, kind of interesting. Then a lot of these cruise line stuff right here. NCLH. I took a little dip on actually CCL for a cruise line, and that one, we'll see how that pans out tomorrow and this week. But I took a little bit of a trade, not on this one, but look at all these cruise line stocks. Like, they're starting to bounce a bit, because if you look at the ABCD pattern, here's your A to B, B to C, C to D. You're kind of coming right into it, and you're starting to get stretched out. Yes, the stock is still weak. It's still more speculative, and we've had some weakness, but for a shorter term trade or a little nibble, I don't mind it. And then we've got here's CCL, same thing. Like, look, they behave the same way. So usually if you get one, you don't need like all the others, you just get one. And then Royal Caribbean here as well. So same concept, and there we go. So I will just say I got in personally, real shares, real money. Actually, not shares, option side on this one. Typically I do mostly options most of the time. Like, there's a few things I have some shares in, but most of the time I deal with the option side. because once you trade options, you can mimic the same synthetic positions with the options. You don't always need the shares. So anyway, so I got into this one a little bit and started nibbling a little bit on, we'll see how this pans out here coming up or not. But I thought it was from all these red days we've got, let's take a shot, and it's getting stretched, right? Contrarian viewpoints. So anyways, these are some of the ones I'm looking at, and just show you a little bonus one here. W for more of a short position, not so much a long position. It's coming in, and we are looking at right here, these price levels, man, and it's coming right into this, and it's rolling over. Ah, man, it doesn't look very good. So if this breaks this on any sort of volume, especially the 200 could be a little bit of a support level just because it's a nice round number. But if that starts breaking, I would look probably more to short this one. So these are some of the things I'm checking out. Let's see, we got comments or anything like that? All right. Hello, Sasha. Hope you're well. Yeah, I'm doing well. Hey, about BABA or PDD, looks like they're not obeyed the fib levels, have they? Let's check them out. BABA, yeah, BABA is got some serious issues. I mean, this thing's been rolling over. I would say it's fairly extended on the downside for sure. But you gotta, when you look at these things, you start looking at it from the monthly view, then you go to the weekly, then you go back to the daily. So when you look at BABA and I start checking it out from a monthly perspective, you're kind of right in range, right? We have to look at it from a range base. It's not like an individual price point exactly, but it's right there. So if this can hold this price level, we'll see. From an ABCD pattern, you've actually completed that move in BABA at 300. So there's your A to B, B to C, C to D. So if I look at it like that, that's actually been completed. So now the big question is because of all that negativity with BABA that happened, are we going to break this level? Now we are kind of breaking it right now. And it's looking weak and negative. So the question is can we hold? The first day that it broke, that was just a lot of fear, a lot of panic. But now we're getting back above that support level. So now if we can start climbing back up, then that support line will be valid still, because this is just confluence. That's just like your friend being late to the party. So that's just normal, natural tendencies, so that's all that is. So anyway, hope that makes sense. Okay, let's take a look. What else did you mention? PDD. Let's see what I got. Fib levels on the downside here. I'm looking more at also, by the way, on A to B, B to C, C to D. You're kind of checking that out, and they don't hit perfect. Again, it's just a guideline. All right, check out PDD. Okay, so this one, never heard of this one. Let's see, but it does trade quite a lot, so that's good. And I check it out real quick on the monthly. So we look at this. Here's your A to B, B to C, C to D. So already that move was completed. So once that move is completed, something different will happen, which usually means a pullback of some sort. Okay, so now that we have that pullback and we start checking that out, then we start looking at, okay, what's been going on? So we're going on this downside. I don't know what that looks like till I get into the weekly now. So as I get into the weekly, I'm starting to look at A to B, B to C, C to D. And then if I look at it again on the downside, A to B, B to C, C to D. It doesn't have to be exactly perfect. Sometimes the B to C can be sideways. So just keep that in mind. But you're kind of getting into that range right now. So we'll see if that happens. There's nothing here from a support, just a tiny bit here. So I don't know if this is actually going to pan out yet. So the A to B on that swing level, we're looking at like 70 points. So here, 70 points should actually take us lower to about right here. Actually, look at that. It lines it up to this. So it should get down to about 40 if it follows the pattern. It doesn't always follow the pattern. If it follows the pattern, it could actually get down to 40 and nothing, well, not saying nothing would be wrong with the stock, but it would be the typical trade setup from an ABCD perspective. Okay, from a general price pattern, human behavior perspective, that's a typical range. Because if we look at this, same thing, human behavior, right there, simple ABCD pattern. Okay, and we'll look at this level, bada bing. we've got about 68 points. Again, you could do the calculation if you want it more precise, but from the lows here, swing points, 68. We'll take this to here. Let's see how far that goes, 136. So it's a lot more on that range. And you can see it doesn't follow the extension as perfect, but you know, it's kind of there. There's your ABCD pattern. The retracement as well, just again, give you a guideline. Let's see what the retracement was like. Let's try to line up a little more perfect, but here you go. You can see we were right at 38.2. And the shorter that retracement, like if we got a 38.2 retracement or a 23.6 instead of, let's say, 61.8, meaning a smaller retracement, the stronger and more powerful that move usually is to that upside. So note and understand that. All right. That's kind of what I got for you guys today. You know, if you've got any other stocks, let me know and I'll take a look at them here real quick. Other than that, man, you guys have a awesome, what is it? Not even Friday. It's a happy Monday. Enjoy your week ahead, man. There's a lot of things going on this week. So hopefully you guys doing well. And yeah, we're going to try and do a couple more stream setups here soon. I'll try and get some more people like on the chat, on the live chat, and we'll even try to do like some one-on-one sessions for you guys so you can ask questions directly. Right now, I'm just testing some things on the live stream out. Today, what did I work on? I worked on a disclaimer as well to put the disclaimer stuff up. Yeah, hey John, yeah, thanks. Yeah, I hope you have an awesome and great evening as well. So later on, I've got some stuff I'm going to test out for the Restream and multiple platforms. So a little bit at a time. I got the team working on some thumbnails, and you know, obviously I got a couple businesses that are run and so on. So yeah, absolutely. You guys have an awesome week ahead. I will see you next time, and feel free to join me. You know, I'll try to do some things usually just like during the day. It's kind of like 11 and 11:15, 1 p.m. and 9:30 Eastern. And that just depends on the day, because sometimes I do coaching sessions evening times and during the day. So it varies. So my schedule's flips around. So thanks again. Enjoy. And I will see you guys next time.